Hey guys, welcome to another session of Real Talk Weekly here with Josh and Harry. Today we'll be talking about the truth behind Australia's auction market. It's going to be an interesting one, so stay tuned. Hey guys, how are we?
Good.
Harry, good.
Busy Monday today.
Yeah, busy. Good way to end the day. Real Talk Weekly. We've got a pretty interesting one.
Hot topic.
Yeah,
We've got a hot topic.
Very hot topic. I know I was watching a video from Tom Panos, if anyone doesn't know, one of the big auctioneers in New South Wales, and he described it as one of his worst weekends in his career. 0 for 0. And I believe he had no registered bidders over maybe 6 or 7 properties.
Wow,
which is quite big. So we thought, let's unpack the data. Let's discuss auction clearance rates. And guys, for anyone that doesn't know what an auction clearance rate is, it's essentially it's a way of basically saying how many there were 10, for example, properties going up for auction. What number of those transacted through the auction or sold under the hammer? So obviously for something, say a 50%, 5 out of those 10 are transacting at auction. But yeah, big zero from this previous weekend. And Harry and I thought we'd go through the data and compare the last 3 months, because obviously they're probably the big ones, and compare that to this time last year and get a sense of what the differences or changes are in the marketplace currently. Has?
Yeah. Well, at the moment, at this point of recording, the auction clearance rates on average are about 53%, which is some of the lowest, I think, if not the lowest they've ever been in history.
Yep.
And essentially, and what that means if you're, a buyer or a seller, and how this affects you if you're in the market looking to buy or sell. Auction clearance rates are a very good indication. It's a very good transparent indication of buyer confidence. Essentially, if you're a buyer and you're sort of looking at these numbers, or a seller, it sort of gives you a really good idea as to how many people are attending auctions, how many people are actually putting their foot down at the auctions and actually buying property. There is a few factors which we'll unpack with Josh, that sort of come into play with the auction clearance rates. And that first thing is buyer confidence.
Yeah, definitely. Buyer confidence is, nothing is more transparent than an auction. Obviously, offers are made in front of other buyers with the vendor. There's nothing more transparent than an auction. So yes, a very good indication of buyer confidence. Obviously, the more people you have registered bidding, the more bids you have, and therefore gives you an indication of where the market's at, where buyers are at in terms of they're willing to transact in the current marketplace. I've just got some figures here, just over a couple of the key capitals across Australia, give an indication where averages of these clearance rates currently sit. So Sydney, over the last 3 months, an average of 47 to 55%. So that's essentially saying pretty much half of the properties that are going up for auction are selling at the hammer. This time last year, we were looking at anywhere between 68 and 73%. So quite a sizable drop there, guys. You're talking almost essentially half, closer to half than a quarter. So big moves there. Melbourne's currently sitting at 49 to 60%. Same period last year, 69 to 74. Brisbane, 23 to 40% currently. This time last year, 45 to 60. Adelaide, 45 to 60. This time last year, 70 to 80%. So some massive drops there. And generally, one of the questions you get is, what are the reactions of clearance rates in different markets? And I guess
I think one of them is patience with buyers. I get asked this question a lot with sellers. It's like, if auction clearance rates are low, well, then what does that mean for a buyer? It just generally means buyers are a lot more cautious and tend to react a little bit more slower. They take more time to compare their options, take more time to do their due diligence, and it ends up just being a little bit more of a slower transaction from a buyer's perspective. That's some of the main feedback that I tend to see from them.
Yeah, and I'd say from a seller's perspective, generally markets like the Northern Beaches are quite resilient markets, and those resilient markets generally have a demographic of individuals or owners that can withstand, tough periods, or periods we're experiencing now where there's no real pressure financially to put that property on the market. So what we see is these areas where we've got resilient owners tend to hold their asset, their home, during these periods and reposition them in a more favourable market. We've already started to see that in the Northern Beaches, and that's with the supply or available properties on the market. Probably from about sort of the last high was November last year, around that sort of November, December period into early 2026, we had a range of, about 1,000 to 1,100 properties available for sale across the Northern Beaches. Over the last week or two, we've seen that drop considerably down towards that 800 level. So we're talking about, 20 to 25% drop in supply. That also helps in these markets because obviously the more supply, the more choice for buyers. But obviously if there's less available, you're going to have a more competitive campaign. Less available, you'll have generally in a market such as Sydney, you'll tend to have more than one buyer on the property. So there's still that competitiveness for that A-class stock. There's always transactions occurring within the marketplace. We have generally seen a fall in maybe the pricing or the ability of buyers to pay up, but I don't think we've seen too much of a struggle on transaction volumes. So, which is good to see in the marketplace. But yeah, generally when you start to see this sort of correction, supply dries up, and these correction periods, we did a study on this, or some data-driven study. These correction periods probably last on the beaches, and we took data over the last 25 years to 50 years. These corrections generally last anywhere between 12 to 18 months for it to find the bottom per se.
Yep.
Then once you're at that bottom, generally transactions start to pick up, and that in turn will bring some confidence back to other buyers who are all of a sudden missing out on properties again, seeing things transact quickly. That's the sort of action that brings some confidence back to the buyers. Generally, that takes around 6 to 9 months after that correction period. And then we actually start to see some growth occur again. Look, we don't have a crystal ball. Every other time it's surpassed the previous high. Over that same data record, it's always surpassed the previous high in terms of median house prices. But we haven't really quite seen a landscape change like we have with the budget. Last time this happened, it lasted 2 years before they completely abolished the negative gearing changes. So that didn't take too long. We don't know what we're in for in regards to the future here. But yeah, very interesting.
I also think another question that I get asked a lot as an agent is, with auction clearance rates currently really low, does that mean prices are falling? Which I think is a very interesting question. And I think I wouldn't say prices necessarily drop. I think that, if there's an auction taking place and, the bidders aren't really there's not really much competition being built, and the vendor doesn't, ultimately get the price that they're looking for. I'm finding a lot of vendors actually that are in a position where they don't necessarily need to sell in this current market. They're sort of withdrawing their properties from the market, and they'll reposition and list the property back on when the market picks up and there's a lot more.
Yeah, definitely. I mean, I would say you're correct in that. What I would probably have a different look upon is if there's low confidence in the market, generally prices are lower, are on the way down. Prices are built on competition. So obviously the less buyers you have in a marketplace, the less demand. That generally means you're not going to be achieving record-breaking prices. And yes, some vendors will be pulling their market off property, but there are going to be the vendors that need to sell.
Correct.
And they will sell where the market's at. So you generally do see a bit of a reduction in prices, which we have seen in the marketplace, but testament to buying in these times in tightly held areas, because that's why the rebound is generally much sharper.
Yep.
Because once we see that confidence brought back to the market, those vendors are bringing their properties back on at the prices they wanted previously. And once that confidence is back, they start to achieve those. So that's probably why you start, I think it's fantastic buying in any of your tightly held pockets, like your northern beaches, your eastern suburbs. There's plenty of others across Sydney, but just those as examples, buying into those markets in these, call it downturn, because the upturn tends to react quite quickly. We also had some interesting questions put forward to us for tonight's episode. Haz, do you want to get those out? We had some.
Yeah, we covered a couple of them, but there's.
We'll just go back over them because actually, guys, if you've ever got any questions or a topic you want us to talk about, please feel free to send it through. We had some people from the database have some questions about this.
One of them was, what separates the homes that sell from the ones that don't? Which is a really good question.
Yeah, definitely. I think a massive one is in this marketplace is the turnkey aspect. You really got to be. It's like preparing a product on the shelf for your target market. I think the best property that's doing the best at the moment is that turnkey. There's a lot of you already struggle, like Harry said, and we've mentioned, buyer confidence. There's also the added expense of any renovations or works that people are going to need to do. I've found that a lot of the properties that are requiring renovations or something that's not quite up to scratch, that estimated value of what that's going to cost a buyer is always inflated in their head. I would have to say a big one in this marketplace is turnkey, and obviously those areas where you don't see sales come up as often. The tightly held areas continue to do well where there's not much competition. And I think turnkey is probably a big one in this market for your downsizers. You want easy access, and turnkey, that probably might be too.
Yeah.
What about you?
I'm going to touch base very similar to what you said, but I think presentation, as simple as it sounds, having a property neatly and well presented is also a huge a huge factor that dictates whether a property sells or not. I find that the properties that aren't presented well, they don't, lights not on when you're doing the open inspections. If it's got a tenant in there, and it has, a lot of belongings, obviously a lot of things you can control and you can't control, tenant being one of the things that you don't have too much control over. But yeah, just in my experience, your presentation is another really, really big one there.
Yeah, fantastic. Yeah, goes hand in hand. Like presentation. The idea that this buyer can move in and seamlessly move in and enjoy their new space without the idea of, hey, got this incoming mortgage, big deposit, fix the bathrooms. I've got to do something to the kitchen. Those sorts of things. Paint. Whether it's small or big. I think people are anticipating renovations to be expensive. Let's face it, trades, builds, they are expensive at the moment. There's no quick fixes. So that would probably be my thing is have it ready turnkey and in part obviously presented in its best shape, form, manner. But yeah, really good question. And definitely we're starting to see the gap between those two markets. Obviously in a stronger market, I think people are a little bit less focused on those costs and more about securing. When there's supply and choice made available, these are the sorts of things that pushes a buyer to pick one over the other. Next question we has.
I think, and the other one was, why are some Northern Beaches properties still attracting multiple bidders, even in a market with auction clearance rates this low?
Yeah, well, look, I think it's your owner-occupiers. Obviously, with all these tax changes to investments, and it's not just real estate, guys. It's stocks, it's everything. Capital gains changes. your number one investment is your primary residence. It's the only thing that's not taxed so aggressively, or not taxed at all. So I find that, you know, those really sought after properties, those owner-occupier type properties are the ones that do well, continue to do well. Generally, a lot of the time that people have bought something, for example, that property, it's because it's ticked a lot of boxes for them. And I think owner-occs will do well. You know, you're probably less likely to invest in investment properties. Invest that money into your owner-occ, you're not going to get taxed on that gain. So I think that's probably what we're seeing in that marketplace.
Yeah, I agree.
Any other? I think there was one more on that list, wasn't there?
No, that covers it all.
Yeah, well, I think we've really touched. I think the other one was like, are people steering away from auctions now? Yes, generally, I've seen this. I've got friends, Melbourne, Queensland. Queensland was a massive auction market over the last 12 months. A lot of those auction agencies are now tending to move with private treaty.
Yeah.
So yeah, we are seeing a big change in amongst the structure of campaigns. Yes, there's still auctions going. But there seems to be a real move towards private treaty as a preferred selling option. But yeah, big changes, big movements in auction clearance rates. Look to these clearance rates to stabilise, and I see it, you know, a bit of as an opportunity to buyers out there as well.
Yeah.
They weren't securing the same property 12 months ago at this rate, so
100%.
Fantastic opportunity out there. But yeah, very interesting landscape. Let's see how it goes and where we end up. Thanks, guys.
See you later.
Have a great night.
See ya, guys. Bye.
Bye.